Alright, so today I wanted to make a video about Mercado Libre. This is a stock down in South America. First things first, if you get value out of the video, please like, subscribe, check out those links below. Very much appreciate the support. So they're about $101 billion market cap right now. Free cash flow yield about 7%, earnings yield just below 2%. They've been described a lot as like the Amazon of South America. That's a decent way of putting it. I don't think it's perfect necessarily. They do have that retail e-commerce segment. That's the main part of the business. They also have they have a pretty substantial advertising business, and then I do think that they have a lending business as well, and I think they have a credit card as well. So it's definitely similar to Amazon, but they're definitely a little bit different. Very good business in my opinion. To me, the biggest risk with this business is the fact that they're in South America, right? And these are some pretty volatile economies, but they are diversifying to different countries within South America, so that's something that's good. So let's get right into it here. Profitability is very good. I mean, operating margin 12%, net margin 9%, free cash flow margin is the best here, 34%. Management does a good job. They're growing extremely fast. They have a good balance sheet. Shares outstanding actually went down over the last quarter. They are below all of their historical valuations. Based on free cash flow and based on price to sales, I think they definitely look cheap, but based on PE, definitely not. They are expected to grow earnings 16%, revenue 27%. Analysts are bullish. Let's get into the financials here and go over those. So if we look at their income statement first here, revenue has gone up very, very nicely. Basically every quarter revenue is going up. If we look at earnings per share has skyrocketed ever since back in 2021. They were actually slightly negative earnings per share, and then they've actually gone up to $37.69 for the last quarter of 2024. So earnings has absolutely skyrocketed for this business. If we look at shares outstanding, they actually have trended up over the last 5 years and 10 years, but it looks like going back to the middle of 2022, they've actually basically been flat. In fact, they've actually been down. So for the last 3 years, shares outstanding have actually gone down, which is also very good to see. I very much like that. If we look at their metrics here, if we look at net margin, this number's actually gone up. It's the highest it's been since 2017. If we look at free cash flow margin, also similar. Our free cash flow margin looks like it actually is the highest it's ever been, which is very good to see. I very much like that. If we look at free cash flow per share, is at an all-time high. Actually, it's by far at an all-time high. It's gone up. Basically, if you go back to 2021, it was actually negative for that third quarter. It's up to 139, which is very, very good. Revenue per share also at an all-time high. That's going up every single quarter. And something of note about this business as well, just anecdotally, I was in Mexico back in January, and I seen a ton of advertising for them. In fact, I probably seen more advertising for them than any other business. So that's just an anecdotal thing that I was kind of impressed or surprised by. Return on equity is very good, right around 34%. Return on invested capital 28%. Those are very, very good numbers. So let's get into the valuation here, because I think that it's fair to say this is a good business. They're growing extremely fast, but the question is just how what are they worth, right? Just how much should we be paying for this business? So if we go back about 10 years, they've grown earnings at 36% per year. They've grown, actually, earnings per share has averaged 60. They're currently at 53. Revenue's grown 44% per year. So this is a company that's grown extremely fast, right? I mean, growing revenue 44% per year, growing earnings at 36% per year. That's extremely fast growth. Like that's crazy growth. So in this discounted cash flow estimate, I have estimated that they will grow 20% per year, at least earnings. Shares outstanding will grow 1% per year, which, I mean, they've actually been, it's been zero for the last 3 years. And they're going to be at 25 PE, which is about half of what they currently are. That assumes that they're basically exactly fair value and you'll return about 10% per year. So I think it's fair to say that this company is definitely still a little bit undervalued. I mean, if we assume that they don't issue any shares whatsoever, we assume that they stay neutral, and they grow earnings at 25% per year, they're actually 68% undervalued. So I think that's probably a little bit aggressive, so I would probably stick to something like this as more of a base case. I think that they're slightly undervalued. I think that $2,200, $2,300 a share is probably about fair value, but you also have to keep in mind that paying a premium for a business that it is in a more unstable area of the world, that's probably, I mean, you could make the case, okay, maybe it's worth a 20 PE, which implies that it's about 10% overvalued. So I think that worst case scenario, this company is 5 or 10% overvalued. Best case scenario, it's probably 50% undervalued. So just based on that probability, I think it's fair to say that this company is undervalued. I definitely think that it's slightly undervalued, but you also have to keep in mind that there definitely is a risk that comes with investing in companies outside of the first world, especially America, right? America is, at least as far as that stuff goes, the safest bet that you can make when it comes to investing. So the gist of it here is I very much do like this company. I think that South America definitely, of all the places in the world, frankly, you could make the argument that South America has the most room to grow. I mean, if you just break it down here, I mean, Europe is shooting itself in the foot. Asia, at least most of Asia, has very poor demographics. I mean, I think that their growth metrics are definitely compelling, but they have very poor demographics. Africa, I mean, they certainly have some. I mean, the demographics are very good, but they have their regulatory environment, their ability to accept growth in general is just not there in a lot of ways. The same goes for South America, just not to the same degree, which is why I think I like this kind of area. And I mean, I mentioned that they had a lot of advertising, and that was specifically on YouTube. And I mean, and social media in general. I've seen them a little bit on Instagram as well. That's where the people in their 20s and 30s are. Those are the people that 10 years, 5, 10, 20 years from now are going to have the most money to spend. So I think that that's a very good growth play from them. You're definitely paying for future growth here. You're not paying for a business right now necessarily. You're paying for a business that's going to be killing it even more 10 or 20 years from now. And that's what I'm hoping for here. I'm keeping it a small position. Like, I'm never going to allow this to be more than 1 or 2, maybe 3% of my overall portfolio. So I am being conservative there. But at the end of the day, I think the risk reward is definitely worth it. Like, I definitely think it's worth it. So anyway, that's what I wanted to bring up today. Like I mentioned at the start of the video, if you got value, please like, subscribe, check out those links below. Like I say, very much appreciate all the support I can get, and stay tuned for more.